Well, Adrian, thank you for joining us here today.
Well, thank you, Angela.
So you gave a talk today on some of the problems and the issues that you see in gold mining today.
Right.
So tell our viewers a little bit more about what you're talking about.
First of all, mining is an inherently difficult business. There are inherent problems that you can't get away from. If you're looking at mining, it's a matter of replacing ounces that you mine because you're mining as a depleting reserve. That's number one problem. As the price of a product, as the price of gold goes up, typically all of your input costs go up. So as the price of gold goes up, so do your costs go up. I think another major problem inherent to the business is you have a fixed asset. You know, you spend millions of dollars looking for something, you spend tens of millions of dollars developing it, you maybe spend $1 billion putting it into production. Well, you can't just move it because the government wants to tax you more. Some of these problems have been exacerbated by poor decisions of management, frankly.
Yeah.
The biggest bad decision the managements make is not being counter-cyclical. This is a very, very cyclical business. If you look at structure of production, commodities are inherently one of the most cyclical sectors out there. And they always will be. That means when prices are high, you don't go out and take on debt to overpay for marginal assets. And that's what too many of the companies were doing in 2011, 12, 13, well, 2010, 11, 12. And then when the prices collapsed in 14 and 15, there were very, very few companies that were out there taking advantage of the bargains. And Paulson did a study that showed that of the acquisitions made in 2010, 11, 12, right, 86 million has been written off already, which is really quite astonishing for a small industry.
Yeah. So Adrian, then why stay in mining? If there are these problems, then why invest?
We're seeing on a global scale, if we're talking about gold, for example, but it's true of other commodities like copper, for example, you're seeing difficulty in finding new ounces or pounds in the case of copper. So the pounds and the ounces that people find or have become naturally more valuable. I think in gold, we probably saw, I'll call it peak, but we probably saw peak production last year. It'll probably be the high production for gold for several years to come. When the senior companies are looking for ounces, if you're a junior with ounces, those ounces are much more valuable than they were. What other sector gives you the opportunity for the whole sector to double or triple in the space of a year in the way that gold mining does? And we've seen that multiple times over the last 20 years. More than that, of course, some of these stocks can go up, tenfold when they have a discovery or get taken over or whatever. I think the big key, though, is not only does your timing have to be reasonably good, but even more important than timing, I think you have to be very, very selective in the companies you buy. I mean, there's a lot of companies here, a lot of them are working hard, doing their best, but very, very, very few companies are going to succeed. That's just the nature of the business.
Yeah. Do you have any companies that are on your radar or any companies that you like?
Oh, I've got lots that are on the radar, and I should point out we already own all of them, or I wouldn't, by its nature, if I like them, we own them for clients. I think Evrim, among the juniors, Evrim is a prospect generator in Mexico with a royalty. Anyway, very, very strong company. Riverside is another prospect generator in Mexico. For joint ventures and alliances, a reasonably strong balance sheet. That means they don't have to raise more money for several years. I always look at management, I look at costs, and I look at balance sheets. Because one of the things that destroys, particularly the junior companies, is the constant going back to market. And without revenue, you have to go back to market, of course. You've got to get the cash from somewhere. But you want a company that therefore has a strong balance sheet and keeps costs under control.
Yep.
Because that dilution really kills you. Think about it. I did a study, I didn't do a study. I took 10 junior exploration companies at random. And I looked at the share count a year ago and the share count today, and then I compared that with the stock price. One company, their share count had gone up about 120% in 1 year. Well, the stock price went down about 60%. And if you think about it, that means the value of the company didn't change. The only thing that happened was they had more shares out, so each share was less valuable. You know, if you double your share count, the value of a company's got to double just for the shares to stay where they are.
Yeah.
So minimizing dilution to me is an extremely important factor.
Before we wrap up, what's your take this year on, you know, the gold price? Where do you kind of see it going? And do you think it'll, you know, any of the hype that we're seeing around Bitcoin or cryptocurrencies come at the expense of gold?
First of all, I'm bullish on gold. I think gold has definitely turned a corner, but it's going to be 2 steps up and 1 step back and 3 steps up and 2 back and so on. But gold has definitely, in my view, definitely turned a corner. And some of the things that have really weighed on gold for the last 6-12 months are turning. So one thing that's weighed on gold is the dollar.
Yep.
The dollar's been strong. The US dollar is definitely, it's definitely turned in the last 6 months, and I think it's probably going to continue to be weaker. The fact that other assets, bonds, stocks, Bitcoin, real estate, have all been doing well means there's less attention paid to gold. Well, the bond market in the US seems to have turned, with a 10-year yield over 2.5%. Bitcoin has had a correction, shall we say, and, you know, a pretty nice correction. At the margin, some people who bought Bitcoin didn't buy gold. So at the margin, it was at the expense of gold. Frankly, I think it was a pretty small impact. I think it was a bigger impact for some of the junior companies where people bought junior, you know, cryptocurrency companies instead of buying junior gold mines, because they're all speculative. So I think some of the money went there instead of going to this sector. But you see, it'll come back if Bitcoin stays under 10,000. You know, people are going to say, well, let's return to the real thing. If the stock market breaks, that's the big one. Because so many people, when I speak to them about gold, they like gold, they're bullish on gold, I hear everything you say. Oh, gold was up 13% last year. Was it really? I didn't realize. But I'm doing fine in the stock market. You know, I've got my Tesla and Netflix, and I'm happy. When those stocks break, then I think you'll see people at the margin, but people will return to gold as an insurance, as a hedge.
Do you have a price target or a figure in mind?
As they say, you never give a price and a time. So I'll give you a price or a time, whichever one you want. No, I think the big thing about gold is the direction. You know, and the price really depends on what happens to other assets, including the dollar. So if you can tell me what's going to happen to the dollar, I'll tell you what's going to happen to gold. I think we're definitely going to get to 1,500 by the end of the year. It's going to take a few years before we get to new highs, but we'll get there. So the direction's right, and that's what really counts.
Absolutely. Well, thank you again for sharing your thoughts with us today, Adrian.
Well, thank you very much.
Okay.
Appreciate it.